Fund Launch Live, the only daily live stream about rolling funds, syndicates, and other 506c publicly marketable funds. If you are a founder who wants to make the transition to a funder, I hope you'll click the follow button and follow along as I make everyday live streams and Twitter threads about the public marketing of unregistered securities like rolling funds. I am Daniel, the rolling fund guy. And today our show is a little different for you. It's going to be a long one. Normally, this show is about 506c offerings. Under SEC Regulation D, Rule 506c provides for things like rolling funds and syndicates. It allows you to raise money from accredited investors and publicly market your offering. Today, we're going into a Regulation A fund. Today, we're looking over Grant Cardone's Cardone Capital. This is not a 506c fund, which means that Grant Cardone is able to raise money from non-accredited investors. That's pretty wild. That's a pretty big change, right? For a recap, the traditional way of raising money through unregistered securities has been 506b funds. Now, a 506b fund means that you can raise money from accredited investors, but you cannot market your fund to a general audience. You can only make sort of backroom deals with people that you reasonably believe are already accredited. The other side of that is that if an unaccredited investor slips in, you as the fund manager are not liable. 506c funds flip that around. Now you can raise money from accredited investors and publicly market your offering, which includes just dropping a tweet about it. But the onus is on you as the fund manager to verify that each LP is in fact accredited. Platforms like AngelList will handle the verification for you. But a Regulation A fund is a little different. Under Regulation A, you can raise money from non-accredited investors and publicly market your fund. And someone doing this to a large degree is Grant Cardone with his Cardone Capital. If you don't know Grant Cardone, he's a business guru, influencer. He has, I would guess, at least 5 to 10 million YouTube subscribers across his total audience. He probably has well over 10 million followers. He throws a big conference every year called 10X. He has books, information products. He's a hustler for sure. Controversial guy. You don't have to like him in order to appreciate the moves that he's making. Cardone Capital is a Regulation A fund of his where he has raised money from accredited and non-accredited investors. Check this out. Since, I believe, 2016, Grant Cardone has raised $880 million from his audience, which works out to around, let's see, 880 million divided by around 10,000 investors comes out to 88,000 per investor. Is that right? Yeah, about average investment per investor around 88,000. That is more than the pre-tax earnings of the average American. He's sent back about $210 million to investors. He's used this $188 million to acquire around $5 billion worth of real estate, around 12,000 units across 36 multifamily properties, and about $250,000 of square feet of commercial office space. Grant Cardone has probably been building his audience since around 2009, and then he launched Cardone Capital in around 2016. So if you're thinking, just on the topic of thinking big, Regardless of your opinion on Grant Cardone, he is a big thinker, and he built an audience and monetized them along the way since 2009. And then since 2016, he's really been monetizing his audience in the largest possible way by soliciting capital from them. So what I have here is a webinar that Grant has used to solicit investment to his fund. So what I'm going to do is I am going to, in this live stream, we're just going to watch along with him. We're going to watch along with Grant Cardone's webinar. Oh, no. What a shame. Hold on. We're going to watch along with Grant Cardone's webinar, and we will be I'll be stopping and starting, making different notes, talking about the marketing tactics and maybe some of the investment things. I am not an investor or a lawyer or a tax accountant, tax attorney, or accountant, so I will try and not give out any sort of advice on those things, but we'll talk about the marketing tactics for what he's doing to launch his fund. Let's go.
Since I was 28 years old, I bought my first deals, got really Since I was 28 years old, I bought my first deals, got really serious about it when I was 31. That was 33 years ago. And I have accumulated $5 billion worth of real estate. And I'm going to tell you right now, there are only a handful of people, or companies, syndicators, and major corporations doing what I do, the way I do it. And what.
Sorry, guys, I want to start from the very beginning here. It seems to be starting where I watched to earlier.
Doing what I do, the way I do it.
Starting
what I'm going to share
mark.
with you today
is there no pause on this?
Tremendous information.
Yeah,
what you should be looking for, how to price it, how to buy it, how to start with no money, how to do it with no debt. I've done all.
So I'm going to, because the webinar does not allow pausing, which, by the way, that is a marketing tactic that we can talk about. The webinar marketing model is that, now I want to search YouTube. Grant Cardone Capital. Okay, because the webinar does not allow for stop and start, we're going to instead find the live stream, the ad, basically the ad for this webinar. Now, as you can see, just searching for Cardone Capital, there's a lot of controversy here. Meet Kevin, for instance, says that his lies could bankrupt Cardone Capital. That was 2 years ago. They have not gone bankrupt yet. And to be clear, I'm not saying that Cardone Capital is a good investment or not. I'm just here to break down the game of how the marketing tactics that he is using to raise this money. Investor Q&A. Interesting. So he starts off with a disclosure here. Our offerings under Rule 506C are for accredited investors only. Generally, no sale may be made to you in this offering if the aggregate purchase price you pay is more than 10% of the greater of your annual income or net worth. Different rules apply to accredited investors and non-natural persons. Before making any representation that your investment does not exceed applicable thresholds, we encourage you to review Rule 251 D2I 1C of Regulation A for general information on investing. Interesting. So a Regulation A offering is not exclusive to being a Rule 506C offering. Okay. So his website explicitly mentions that he's raised money from non-accredited investors. I see. Okay, so what is going on here is that he has raised, he does not have one single fund. It's not like a rolling fund that he gets capital in one fund every quarter. He's raised a series of different funds, and some are under Rule 506C, which are for accredited investors only. Others are under Rule 251 of Regulation A, in which he can solicit non-accredited investors. If you are a non-accredited investor, then the amount of capital that you put in cannot be more than either 10% of your income or your net worth. Come on.
Welcome to the live Q&A. Okay, we bought a deal. Okay, we already have.
Starting off with a Q&A now.
Hey, welcome to the live Q&A. Okay, we already have callers on the phone. I'll give you guys a chance to settle in here. Thank you so much. My name is Grant Cardone. This is Cardone Capital. The goal here is to answer your questions today. I was just going over with some of our viewers. We bought a deal. Hey, welcome to the live Q&A. Okay, we bought a deal. Okay, on December 21st, 2 days ago, I get an email. Dear Grant, that's the same email you'll get. I'm an investor with you, just so you understand. In every deal, I have money in these deals. Not only do I have money in the deals, I bought the deal with my money first. We don't raise money first. I buy the deal with my lump of money, and then I come to the public and say, hey, would you like in this deal? Money either comes in or it doesn't. Either way, I own the deal. So keep in mind that I've done my due diligence, enough due diligence to buy the deal with my cash and sign on the debt. On this deal.
Okay, that's interesting. So Grant says, well, first he says that he reassures prospective investors saying that my money is in these deals with you. I have skin in the game. I have exposure. If you saw yesterday's live stream, you remember that in the AngelList Rolling Funds platform, fund managers can do what's called a cashless commit, which means instead of before the fund launches, committing an amount of their capital to the fund, they can just funnel their management fees into the fund as their commit. So if you have $25K in management fees coming in every quarter, then you can just use that money as your own commit, lower your risk as a GP. Now, the second thing that Grant is saying here is that he's purchasing the deals before soliciting the investment. I'm curious to know about that. He's saying that he has selected the deals, which makes sense. You'd probably want to select deals before raising a fund for it. Selected deals and then signed for the debt before raising money. So that makes it sound like he's using the solicited capital just to pay down his debt, or just to perhaps he's negotiating a very some sort of conditional down payment, where maybe the bank will let him pay a small percentage down payment on the condition that his audience then funds the rest of the down payment to a reasonable amount. This is a little bit different than how 506c funds are used in venture capital, where you are soliciting money to then be given to early stage startups. On those deals, obviously the money is given. The GP isn't pledging money before he has it in the fund.
Again, you can't get in this deal. This deal's gone. Okay, it's called Port St. Lucie. We didn't promise, but we think it will do 6% a year. And it did, by the way. It did 6% a year. In fact, it did. Hey, we have great news. Can you show this email? Can you show this email so they can see it? we have great news. Reserve it, Port St. Lucie, LLC operations performed ahead of expectations during 2018. Accordingly, you will receive, it's a misspelling, you will receive a distribution in the amount of $35,000 or 6% of your investment. The annual distribution combined with your 6% preferred gives you 12%. Now, when I bought this deal, I told the investor.
That's a great credibility tactic here. He's raised money for a series of different deals before this. It sounds like he's doing sort of a syndicate path where he's raising money on a per deal basis. Which, by the way, in tech investing, syndicates are not quite as popular as, or not quite as preferred as rolling funds, because when you are investing in early stage tech companies, you don't know which of your investments are going to be the unicorn that makes the rest of the fund profitable. Most of your investments will be lost. So it's generally considered smarter to invest across a fund rather than into a specific deal in early stage tech, because most deals fail. Most investments are not recouped in early stage tech. So you want exposure to a broad portfolio of investments, whereas in real estate, it's considered a bit less risky, and you can invest on you might want to invest on a more deal by deal basis. Now, Grant is showing an email that his company sent to investors announcing the returns from one of their deals. This is a great method of showing credibility and advertising a 12% cash-on-cash return. Now, I would be curious how a lawyer what his lawyers have told him about advertising past performance. You can be on thin ice when you're talking about the past performance of deals, particularly when you don't make it clear that what is an outlier and what isn't. If, for instance, this deal had returned 12% cash-on-cash return in a year, but his other deals had tanked, obviously that would be a little unethical to advertise. But as far as building credibility goes, it is great to show what you have returned to investors already.
6% preferred gives you 12%. Now, when I bought this deal, I told the investors, I expect to deliver 6% return to you while you're invested in this deal. My goal is to match that. Everybody laughed at me when I said it, man. You can't tell people that. I said, my goal is to match that at the end of the year. We hit that number exactly. So that deal, when was that deal closed? 18 months ago. Couldn't have been more than 18 months ago. 2 years ago. Okay. That means this group, everybody that invested with me on that deal, is earning 12% a year.
So on the one hand, it is good for credibility when you can make a prediction and then see it through. On the other, you want to be very careful when you're making any sort of claims about investment performance. In fact, you probably should just not make any claims about investment performance. Again, I'm not a lawyer or a tax accountant or an investor. I'm a marketer. But it is fantastic for advertising when you can show that your fund has performed exactly as you said it would. Again, if you were watching this broadcast from the perspective of a tech investor, this would all be nonsense anyways, because early stage tech is so unpredictable. There's absolutely no way of, one, returning money within the course of a year. Early stage tech investments, money is going to be tied up for 3, 5, 7, 10 years. Two, you'd have no way of projecting a percentage gain year over year on an individual investment. With real estate, it is somewhat more predictable because there's a thousands of year history about humans needing and wanting places to live. Whereas some sort of real estate will perform well. Whereas if you are investing in early stage tech, if you make a company called, Bazinga, who knows if the market wants that at all. So perhaps Grant Cardone can get away with these claims a little bit better because he's operating in a more sure investment field. Also, because he has a team of lawyers. When you have your own in-house counsel, you get to play by slightly different rules than if you are just a solo investor.
Okay, so we want to answer your questions, Justin. I hope that helps. Also, by the way, just let me tell you that to answer his question again, even though I got distributed 12% on that deal, I'll probably show no income because of my K1. The investors will probably show no.
That's an interesting idea. Should I analyze the K1 statements from funds like this? How to write that down.
Income, because the depreciation on that transaction will wipe out the cash flow you received. Number one. Number two, cash flow distributed from real estate as a passive investor is not taxed at the same rates that earned income is. Okay. Okay, Johnny. Yeah, I want to show them the email because can they see it?
Grant Cardone has a private Facebook group just for people that have, just for his investors. A lot of internet marketers offer private Facebook groups for different purchases. You know, join my course and get access to our mastermind where you could talk with other ambitious people. Usually these are complete junk. If you're joining a mastermind for how to make $10,000 a month, the other people in that mastermind are not people who are making the amount of money that you want to make. They're people who are broke just like you. But it does seem like a good idea to have one for investors, to have a portal, a platform where you can more directly and frequently contact them. Now, you could do that simply with sending out email updates, but by having a Facebook group, you allow them to to network with each other and ask questions to you in a more public fashion.
You can just talk. It's fine. They can see the email right now. Okay, so Johnny, do you see the email? Okay, yeah.
Look how many tabs my man has up right now. He ought to use Mighty. Shout out to, is it Suhail that made Mighty?
So, oh, okay. Yeah, let me talk to Scott Simon.
And I want to mic Johnny too, because I want to, on this depreciation,
yeah.
things to mention too to that guy is we do it all for him. You know, people call and they're like, hey, how do I do depreciation?
Yeah, you don't do the depreciation. Just so you guys know, you get a form called a K1. Everything's on there. It's no different than me going, I'm not going to go do the depreciation. We have accountants that do that. They send you the K1. You get it at the end. You get about October, right?
No, you get it. So you'll get it in April.
Or April or October. Okay, you could be as late as October.
Gotcha.
Now, some of you, I'll just tell you, just want to forewarn you. You may have extended returns. That does not mean a penalty. You have the right to extend your terms, your filings. You should. Everybody should extend filings. You should never give them their money in April. You should extend the filing, make sure you got everything in order. The goal is with real estate is to reduce, number one, preserve your capital. Don't lose money. Be illiquid. 2, get cash flow. 3, don't pay taxes. Okay, I think I got an investor on the phone. And again, questions for everybody. I want to know what your questions are too, but who's on the phone? Is this Diane or?
You want to go over the high level overview of the fund in between?
Yeah, sure. Go ahead. Yeah, I don't care. Let me hold them on. Can we hold them? Hold them. Let me just go over the. Okay, so again, guys, this is a live Q&A for those that are either invested in Cardone Capital or interested, and you filled out. I just don't see the live right now. Can I see the questions, guys?
I have.
Because I don't see the questions.
Yeah.
This is why I wanted to show his actual webinar advertising the fund. This Q&A is has a lot of dead air in it. I'm going to figure out how to pause webinars, and then we'll analyze that webinar of his.
Yeah, I have them right here.
But why don't I see them?
Let me see why you don't have it popped up.
No, I do.
Tap the screen and it'll open up. Full screen, you'll see the comments to the right hand side.
from Asia. Hi, Uncle G. This is from Yan. She's in Asia. Okay. So Yan, your question is going to be, number one, how do I invest when I'm outside the country? You want to answer that question?
So there's two ways. The first one is they can get a U.S. tax ID number and also a bank account here in the United States, and they can invest through that route.
And we can help you do that. Okay. For a very limited amount of money, you can get an LLC in the United States. You buy an LLC. It takes about 20 to 30 days. We already have people that can help you with that. So I think how much is that? $300 or $400?
Yeah, $300-400.
$300 or $400. You can buy an LLC in the United States. You'd create the LLC, then you create a checking account because now you have an LLC in the United States, and now you have that. What's it called? The U.S.
The U.S. tax ID number.
Interesting business idea here. If you are a U.S.-based influencer and your audience is largely foreign, let's say that you're a Spanish language influencer and most of your audience is in South America, it would be interesting, a business that specializes in helping you in setting up LLCs for your audience so that they outside of America can still invest in deals inside of America. And a foreign LLC 506C or Regulation A setup service provider agency.
And there you go. Now you can invest in the United States. And let me just say that if you're in Asia or India or South America, or you're anywhere in England, the assets that we buy, you cannot buy in those 4 countries. The assets that we purchased, that we buy, India. You go. Now you can invest in the United States. And let me just say that if you're in Asia. Or India, or South America, or you're anywhere in England, the assets that we buy, you cannot buy in those 4 countries. The assets that we purchase today, you cannot just go buy these in Russia. Russia, the UK, this is not an over-exaggeration for my staff either. You cannot buy the assets that we're buying anywhere in South America. These properties do not exist as 300-unit, $40 million, $50 million properties that cash flow. Okay,
so he's making he's not making a legal statement here. Grant is making a clever marketing statement about opportunity. He's saying that if you reside in a poorer country, I guess he's lumping England in there too, that you just don't have these kind of real estate opportunities in these countries, that America is the country that has 400-unit apartment complexes, etc. And if you're going to invest in America, you invest in real estate, you may as well invest in American real estate, get your LLC, and find a way to jump into Grant's fund.
Justin Young, what am I to expect from this as my first investment with $10,000? First time investing, of course, needs to be GC. Okay, so this is what we expect $10,000 to do. This was one of the most asked questions. 10,000, I put in 10,000, what do I get? We expect that deal will pay $500 a year.
Woo! Making an exact claim. As far as I know, Grant Cardone has not been taken to court yet. You would think he would, claiming that if you invest $10,000, you're going to get $500 out of it. It's bizarre, but if you want to see how far the envelope can be pushed for publicly soliciting a fund, you probably should keep your eye on Cardone. Love him or hate him, you should definitely be aware of him and study him. Also, if anyone in the audience is saying, wow, I really don't like the idea that someone is taking their first $10,000 and for their first investment is investing it in an internet influencer, that's a very valid opinion. I completely understand that. This stream is not is not here to endorse any funds. This is just, I'm just breaking down the different tactics used. Love them or hate them, you must understand them.
That's not our goal. That's what we think it will do. Our goal is $500 a year in year 1. We expect as rents grow that this distribution over time will increase. If you believe rents are going to go up, if rents go up, then cash flow goes up. So the number of units times cash flow equals appreciation. As rents go up, the reason properties go up in value, by the way, multifamily is the only sector in 2018 that continues to go up. Everything else in the housing sectors has gone down. Everything. Okay? All right? So that's our goal, but that's our cash flow goal. Our cash flow goal.
On that note of making claims and not pissing off the SEC, it's 2022 now. Grant Cardone has been doing this since around 2016, and so far he has not been taken to court over it or gone bust. Now that could still happen for sure, but it's been at least a few years and nothing has happened. And his fund is bigger than ever.
You're getting a drip to remind you made this investment. Very few funds pay every month. We pay every month. The reason we pay every month, Jared, you know the answer to this, right?
Yeah.
Why?
We'd rather send checks than collect.
Because I want to
That's how you
check
want
every
to be
month.
paid.
I want to be paid every month. I want money coming in. I like money coming in. It reminds me that the investment was good. It's a victory. So, are you going to get rich on $500 a month? This is what people say. It's only, or $500. It's $500 a year.
Right.
Oh my God! It's only 40.
That's a big slip up from $500 a year to $500 a month.
$45 a month, right? But it's only $10,000 you invested. If you invested $1 million, that would be $50,000 a year. In 10 years, you have half your money back. If it only cash flows at 5%. We don't think that this will continue to flow at 5%. We think it'll be 5. We think 24 to 27 months from now, it'll be 7. We think take it out another 60 months, we'll think we'll be at 9 or 10. But I've always been wrong. I'm just telling you guys. I've always underestimated how much rents would grow.
He's very careful to use the word think. I think that this is the projection. I'm not sure how much that would actually protect him in a lawsuit, but he hasn't been sued yet.
Our goal is for every investor to pay them cash flow every month and every year, and then the 2x or 3x that original investment. This is where I win. When I start 2xing and 3xing on the exit, when we sell, this is the sale, this is where we benefit as a group, okay? So my goal as your partner, my job is to make sure your money's protected, number one. Number two, make sure it cash flows. Number three, make sure I pick the right piece of property so that when we go to sell this thing, I can rip somebody's head off, tear their head right off their shoulders, just cavitate them, because we pick such a great property that people are willing, not just one person's willing to pay me a premium, but 2 or 3 people are willing to bid the price up and pay us. At which point we exit, we sell, we pay your 10 grand back, you keep all your cash distributions possibly for 10 years, okay? And then at that point, we carve it up. I give you your 10 grand back. Everybody gets their money back first. And then we have a pot of gold left over. You get 65% of that money. I'm going to carve off 35% for me. I only get my 35% once there's a profit in the deals. Okay.
Interesting. That's a good narrative to paint. The idea that your money is going to earn immediate cash flow, monthly, by the way. 30 days after you send Grant your money, you're going to get that first check, and it's not going to be very much. Like he said, if you put in $10,000, you're going to get a monthly check of $45. But that just makes it feel like it's real, like something's happening. It makes you feel like you haven't been suckered because you're seeing a result just 30 days later. And then Grant is able to paint this narrative where, you get this guaranteed money every 30 days, and then someday, perhaps, you'll get your full investment recouped irregardless of the cash flow. And then you could make a profit on top. Grant is taking, I guess you could say he's taking 35% carry, right? If he buys a building for, using round numbers, $10 million of investor capital, it doubles to 20 million, 10 million in profit. He takes 1/3 carry, 3.5, and then 6.5 is divided amongst his LPs. 35% carry. I'd be curious to know what carry percentages usually are in the world of real estate. And tech investing, it tends to be 20 as the standard, possibly up to 30. I'd also be curious to know if Cardone charges management fees and what those are.
Okay.
Great question from Luke here. It says, when will the properties be purchased in this investment?
Good question. The properties are already purchased. You come in today, call my office today. Will they get a check next month?
No.
These deals are done.
60 to 90 days.
Okay. This is what we do. We buy deals, and then we offer, what would that be called?
The equity or
we offer shares. Okay, partnership shares. Okay, so we buy it first. Most companies, what they do is they go raise money. We buy and then raise. We're not really raising money, but I guess I got to call it that. So we buy the deal and then we raise the money. Most groups raise the money and then
have to buy.
Then they buy. Okay, we buy with my money, then we offer. I'm not really raising money. I'm offering you a position that I've already taken, and I just give you my piece of the deal.
Grant's a smart guy. He's a shark for sure. You have to assume that he is structuring every deal to be in his favor as much as is possible. So I'd be curious to know with the structure here of buying and then raising money, whether how that plays in, what the advantage is for him there. Is it simply that he gets to the goodwill of being able to assure investors that the building's already been bought, or is there some does it work out so that he gets more capital by buying first? Curious.
Is there a chance that the other way that they end up buying an asset just because they need to? Like,
Absolutely. Yeah. They raise the money, and then they're like, I have to buy something. We buy something that we want with my money. We're looking all year long. I mean, you see me flying around looking at properties. I'm in Houston, I'm in Austin. I see. I can't open my thing to see my questions for some reason.
You want me to help you out? Arthur
Really would
Pham,
appreciate that.
he says, is there a preferred return on Fund 5?
There's no preferred return. Whatever the cash flow is the cash flow, which means you can also get more than 5%. Is your company listed on the New York Stock Exchange? No, it's not.
Not yet.
But it could be one day, okay? Can I use this is from Julie Nichols. Can I use my SEP IRA to invest? I will be subject to the atrocious penalty for pulling money out to invest. Put Diane on the phone because Diane came out of a retirement account. Now,
And Grant, you can give my direct email address as well. I can help anybody who wants to do a self-directed IRA.
okay.
So we can help.
I think we want to, huh? Hey, Diane.
Yes.
How you doing? This is my sister, just so everybody knows. So for full transparency, this is, I've either brainwashed her, she's my sister, and she's going to say great things about me. But Diane, I want you to, rather than saying great things about me, just talk about, you want to tell them how much money you put in with me?
No, but I put in probably everything I have.
I was on the phone with her the other day, and I said, how liquid are you? I was in Houston. I picked her up the other day. I said, how much more money do you have? How much cash do you have? Now, Diane, the last money that you invested with me, where did that money come from?
Not a good look to hear someone say they put in all the money they have to your fund. It's slightly more reassuring that this is his sister, apparently. Oof, though. All the money you have.
That came from money I made with you.
No. The money you put into St. Lucie.
From savings.
No, but what savings account? Where was that money sitting? Because I know you
Like
paid
a bank account, making nothing.
No, but you paid a penalty on that money. That money came out of a retirement account.
Oh, the retirement account money. Yeah, I paid income tax in advance for money I pulled out of my IRA and put it into, I think that was a St. Lucie property.
That's right.
I just got an email. You were talking about St. Lucie just now. I just got an email, and I'm getting an extra $14,292.
Yeah. Now she
on
paid
top of everything that's paid every month.
She paid her penalty. This is going back to the question that was just asked to me here. She paid her penalty. She's like, Grant, why would I pay a penalty to come out of? I'm like, you're going to pay it anyway. That's your money. Pay the penalty. The problem is, you see the 401ks and the retirement accounts, they're holding you guys hostage by saying, oh, there's going to be a penalty. It's going to be a big penalty. Oh, my God, there's a big penalty. Dude, the penalty is going to be keeping the money in there, and it either doesn't earn anything or it's getting cranked. It's going down in value right now because of what the stock market is doing.
And it really wasn't a penalty. It was the income tax that I'm going to pay at some point, no matter what, whenever I draw that money out.
Right, and a lot of you, this is a great thing that she's saying, because a lot of you have the penalty confused with the tax you're going to pay anyway. I said, Diane, either way you're paying that, pay it now rather than putting it off. Let's get the money to work. And what'd that pay you last month, Diane?
Oh, it paid me 6% last month, and I'm getting an extra 7% in one big lump check.
Pow. Okay, now check it out. She's 70 years old. Jared's in the deal. She said, that's my older sister. She raised me, just so everybody.
Definitely do not like the idea of a 70-year-old saying she put almost everything she has into a speculative, unregistered investment.
knows. Like, I'd have to be a pretty evil person to not want to take care of my sister. So I know a lot of you are thinking, oh, it's your sister and everything. I did my sister a favor putting her in this fund. Again, I bought the deal. I had money in the deal. I called my sister up. I'm like, exactly what we're telling you. We buy the deal, then I call my friends up and say, hey, do you want to be in the deal? And that's what I'm doing for you guys today. If you want to be in the deal, go to cardonecapital.com. Non-accredited investors can now invest with me. If your money's in a cash account, it's a minimum of $10,000, maximum of 100, right? Are we capped at 100?
Max 100, yep.
Max of 100,000. Can I show them the account?
In later marketing materials, I've seen Grant advertise that he can accept investments as little as 1,000. I don't know if the current 10 to 100 cap that he mentions right now is based on regulation or based on precaution, or just it's less headache to solicit large investments for him rather than 4-digit investments. But he has moved on to accepting, for some funds at least, investments as little as 1,000.
John, okay. And I'm going to show you what the account looks.
If you're tuning in, this live stream here is not a rolling fund. This is not a rolling fund, but it is another example of marketing generally solicitable securities.
Looks like we created a portal for you. Hey, Diane, do you like the portal?
Oh, it's wonderful. It's fantastic. I can see everything that I'm invested in. It's just fantastic.
I swear a quarter of the tabs that he has on his screen are to his own website.
And I really want to mention something to everybody that's listening. I had my stockbroker's license years ago, so I'm a pretty savvy investor as far as stocks in the market. This is undoubtedly the surest, most solid investment I've ever made in my life. I've been investing with you for 30 years now, I guess, since the very beginning, and I have never lost a dime.
That's awesome, sis.
That is.
So
good luck. I do have
hey,
one
if
problem.
anything happens to you, I hope you give me all that money.
Yeah.
Come
I
back,
have
Jim.
one question.
Yeah.
I don't know how to spend all the money I'm getting every month.
Send some my way.
Add Ryan and Jared to your list.
Okay.
Come on, Diane.
Hey,
So-
Million gang.
get your growth con tickets.
So Grant,
Buy some jet fuel.
Yeah.
You didn't offer to pay for the jet fuel the other day.
No.
We'll just take it out of her distribution.
Dude, I picked her up the other day, just to give you guys a side note. I picked her up the other day. I called her up. I said, hey, I'm going to Houston. You want to come with me? So we pick her up. We get over there. We stay at a hotel that night. Beautiful hotel, Post Oak in Houston. It's the nicest hotel in Houston. And then I start working on her. How liquid are you? How much money you got? Is this why you came to pick me up? So all of you out there, I just want you to know, man, I know you guys hear me pounding on you all the time. I'm either trying to sell you something or get you to go to something or join something with me. This will be the thing I'm remembered for more than all that other stuff. Our goal here is to send more money out every month than we've ever received.
I have to agree with Grant here. The ultimate product that a influencer can sell, the ultimate offering that an influencer can put their name on is no longer a product or a service. It is a fund. It is investment. So far, up to this point in history, we've really seen influencers sell products. But I think that the real top of the funnel, the real bottom of the funnel and the real top of the value ladder, the ultimate ascension, is going to be influencers soliciting investments for funds that they are partnered with. Jake Paul is already ahead of the curve here. Jake Paul is part of something called Anti-Fund. It is a angel list rolling fund where he has partnered with a investor named let's see what his name is. Jeffrey Wu. Venture capital for pioneers and rebels manifesting the future. Interesting. You can see that I got to break this down on a live. Obviously, just you can tell from the start here by calling it a manifesto rather than a thesis that Anti-Fund is much more marketing savvy than other rolling funds. And oh, look at this. Their minimum investment is going to be $100K over the course of your first year. But Anti-Fund is probably the premier example right now of a celebrity lending their name to a rolling fund rather than just a product. Back to Grant Cardone. By the way, if anyone is leaving comments, I can't see them because I'm not on the live stream page. I'm assuming that no one is, because at this point in these live streams, I'm really doing it. No one's watching, as I expected. That is totally fine, because we are just on. I think this is day 7. We've done 7 in a row of the only daily live stream about rolling funds and publicly marketable unregistered securities. But if there is anyone leaving comments, I can't see them just because I don't expect there to be any.
So John, let me just show the Cardone Capital. If you guys are not in the private group right now, you're missing out on this.
Yeah, so do you want to tell the folks on Instagram that that's where you're taking questions from? And if they want to go there, go to, if they just go to Facebook and they go to the Cardone Capital Investors Group, to join the group there, that is where you will get access to the Facebook feed, which is where Grant's pulling questions from. So if you're on Instagram, go to the Cardone Capital Investors Group on Facebook. That's where all the questions are being answered through.
And then you can see this portal that we created for you. Cardone Capital, this is the portal. We created this portal. This portal shows you the deals we're working, the deals we're looking at, the deals we're buying, the deals we're passing on. Like with me, everything's very transparent. I go look at deals. I didn't do that deal. I went and tried to buy a deal. We had it listed as a deal, and then I tell you, hey, I lost the deal. I couldn't get it. So I'm just going to show you some of the stuff that you.
That's a good way of building repartee with investors, is to show them the deals that you passed on. Show them, one, there's some sort of vulnerability there, and showing, hey, I wanted this deal, I couldn't get it. Here's my failure, and being upfront about that. But also showing that you were being meticulous with their money, saying, hey, here's a deal I was interested in, but in the end, I found out that there was this element which I didn't like. That's a pretty clever idea. Not just showing the deals that you're part of, but showing what you were looking for and what you didn't invest in.
That you can find out here. Investments.
Oh, Scott Simon's still on the line?
Okay, yeah. We'll talk to Scott in just a second. Tell Scott to hold on, okay? So here's some deals right here. Johnny, can we show him this? So Cardone Equity Fund 5. There's 2 deals that we're currently having that we have proposed for that fund. One's already been bought, and the other one we're buying. Here's Cardone Equity 4. This is for accredited only investors. That property's been purchased. Here's 3 closed funds you can see. Well, no, not 3. Here's Cardone Equity Fund 3's closed, Cardone Equity Fund 2, Cardone Equity 1, and these other deals that I've done. We're happy to show you what the historicals are these deals. We're happy.
I think I'm going to have to break this down on a live. So as I've said, Grant Cardone has raised a number of funds. As you can tell, he's been doing this for a while. It sounds like these deals shown on screen with individual names like Audubon Park, those are probably a syndicate deal where he has one deal for investors to raise money in, whereas his numbered funds, Cardone Equity Fund 1, 2, 3, 4, 5, those are probably more like traditional funds where he's accepting money to invest in a portfolio of deals. He mentioned that some of his deals are only open to accredited investors, some are not. When you are selling to accredited investors and say a 506C deal, you can raise an unlimited amount of capital. And you can raise there's no checks limit to how large an investor can put in. Whereas if you are raising a Regulation A fund where you can solicit money from non-accredited investors, keep in mind non-accredited investors can't contribute more than 10% of their income or net worth to your fund. So I would imagine that, well, you're playing a depth versus a breadth game. If you're getting unaccredited investment, you're going to be getting a little bit of money, hopefully from the broadest amount of people. And if you are an influencer with a very broad audience like Cardone has, that might work very well for you. Whereas if you are a more niche influencer, like if you're part of VC Twitter, your audience is probably, its strength is in its depth, where you have access to accredited investors, a small number of accredited investors who can cut relatively large check sizes.
We're happy to show you what the cash flow. We own all these deals right now, currently have them. Some of these deals earn 25% a month. Come back to me. So some of these deals started out at 5% like this deal. Some of these deals earn 18%, 20%. Some of these deals, I'm going to tell you the ultimate deal. The ultimate deal, this is velocity wealth creation, okay? Some of these deals will buy. For instance, I'm thinking about one deal. We paid $40 million for it. We put $10 million down to buy it. We refinanced the deal, got all our money back, returned all the money back to the investor while it paid 12% to the investors for about 4 years. Jared's in this deal, okay? 12% it paid the $10 million. The people that represented this $10 million, there was about 18 people that represented this. They were paid 12% a year. I told them, I think it's going to do 5. It did 12. 10 million. The people that represented this $10 million, there was about 18 people that represented this. They were paid 12% a year. I told them, I think it's going to do 5. It did 12.
Interesting. So it sounds like what Grant is saying is that he is purchasing deals he's providing the down payment, and then he's repaying himself back on the down payment with his solicited capital, and then he's letting his LPs earn interest on the solicited capital. So he's putting down the down payment and then having his LPs pay him back for the down payment, and then conceivably the mortgage on the properties is then being paid by the renters.
They got their 12, and then we went and refinanced the deal. What, Jared?
No, I just checked.
Jared.
I checked my bank account because Diane said that we got a big distribution.
Yeah.
Lucy, and I got the same. I got 17 grand from Ormond.
Yeah. So Jared's in this deal too, by the way. This is a different deal. 4 years into the deal.
By the way, soliciting $10 million from 18 people. That's about what, 500K each. 500K times 20 is, yeah, about $10 million. So that would be an accredited investor deal. If you have 500K to throw into a single speculative investment, you are definitely an accredited investor. I'd love to now. Cardone says on his website that over the years he's had over 10,143 different investors, some accredited, some non-accredited, that have contributed to his fund. He's raised $880 million from these 10,000 investors for an average of about $88,000 per investment. This is definitely skewed by the outliers, by the accredited investors who might be contributing $250K or $500K to one of his deals. I'm guessing that for his non-accredited investors, they're probably contributing between 1,000 and maybe 10,000 per deal.
Deal. 38 months into the deal, we went back and refinanced the deal, returned everybody's money. Now nobody has money in the deal. Okay. We refinanced the deal, and now we're still getting cash flow out of the deal with no cash in it. So this is called velocity wealth creation. No money in the deal, we still own the asset, and it still pukes out cash flow. By the way, when we returned the 18 investors their $10 million, this was a non-taxable event. So these are some of the questions you're not asking. I just want to make sure you guys understand some of the potential here. Arthur Tham says, which markets are you represented in the new fund? Texas and Florida. And there's a reason why. There's a reason why. It's because we have job growth in both of those states. Okay.
That was 2018. Nowadays, in 2022, I think that prediction has worked out even better. So many people have migrated to Texas, to Florida, because they did not lock down.
Okay. Julie Nichols says, hey, James, you said 5% minimum. If I invest 10,000, 5% is 500. What am I missing? I don't think you're missing anything. That's the cash flow. That doesn't consider the possibility that we refinance the deal. It doesn't consider the possibility that the rents go up. It doesn't consider the possibility of when we exit. Our exit target is, because we have to tell people something, we expect an internal rate of return of 15% per year. Annualized, okay? So if we're in the deal 10 years, that's 150%. If we're in the deal 8 years, 8 times 15, you can just do the math, 120%. That's not our goal, though. That's what I had to put on the offering. I got to put something. Hey, what should we put on the offering? I can't put what I really think it's going to do, because you guys are going to be like, no way you can do that.
This actually rolls into Anne's question. She says, how long do you typically keep these properties?
Good. Our past, and again, you can go look at my past deals. Our past deals have an average hold time of 39 months, not even close to the 10 years that is in the offering memorandum. We're at 39 months. I think that's going to stretch out a little bit. It's going to get longer than that. The fund is 10 years. Okay, the fund. I have the right to keep your money in that fund for 10 years with discretion to sell sooner, close it sooner, or even extend it till later. Now, this is why. The reason I want 10 years on the term, because there's a lot of 3 and 4 and 5 year terms out there. You do not want short terms right now, okay? The last thing you want is to be in a fund right now that's 3 to 5 years. The worst fund you could possibly be in right now would be a 3 to 5 year fund. Any of you get told by a broker, oh yeah, but you can get out in 3 years, you can get out in 4 years. The reason they're telling you that is they want their fees. They don't get their fees till they exit, And most of these guys get an exit fee whether there's a profit or not. They want out of that fund because they get their 2 points. What are our points on the way out? 1 point?
1 point.
We point everything one time, 1 point. Okay? When we buy in this case, when we buy $50 million, we got $50 million worth of equity going in this deal for the non-accredited fund. I spot the 50. I put the 50 in. You guys come in later and fill a part of that 50 up. That's 50 million. I'm going to go public on this next Friday. I think it's next Friday, right? Next Friday, we're going to go public on this.
It is, yep.
30% of this has already been raised, I think. And we're not public yet. What is my point? This we think will distribute $2.5 million a year in cash flow. That's a big number. That's why I bought the deal. So you guys need to think. Don't think about your 10,000 right now. Why was Grant willing to put $50 million of his money? Because that $50 million earns me $2.5 million, 200 grand every month if I don't give a position away. If I keep this whole thing and you got $50 million and you're like, I'm buying an asset that won't go away. It won't disappear. I can't lose my money. Would you be willing to earn $2.5 million a year? Does that sound like a good number to y'all? Mm-hmm. 200 grand a month? I'm like, dude, I don't have to do anything. And I don't have to worry about it. I don't have to worry about it disappearing or some technology comes, wipes it out. What was my point here? My point is, that's my cash flow. Huh? Oh, yeah. The 50 million is going to buy $150 million worth of real estate. Okay? This is the real estate I'm buying. This is the cash I'm using. This is the multiplying effect, right? This is called leverage, right?
Notice how good Grant is at making concepts very, very simple. I'm sure he has a lot of lawyers and accountants behind the scenes working out these deals, but he's able to compress the pitch into a very understandable, explain it to me like I'm 5 kind of way. That's how he's able to solicit so much investment. He's good at making things simple.
Right? I'm buying $150 million worth of real estate. Would you be willing now to accept $2.5 million and control $150 million? I'm like, dude, that story just got good. You guys said yes to this one. Now you're like, I know you're going to say yes to this one. I control $150 million worth of assets that provide $2.5 million. I'm being paid $2.5 million to control $150 million worth of assets. Just got to be sure they're in the right city, right location, right jobs around them. Okay, I made a good purchase. Now we want to wait 10 years. Okay, I want to wait 10 years. Somewhere between now and 10 years, we think we're going to sell that. I only have a management fee on the 50, not on the 150. A lot of these funds, they're gonna put 2 points on the whole 150. I'm only putting 1 point on the money that we raised. And that money, by the way, that money is what I use to expand the company, manage you, support you, send out your checks. Like all that money gets eaten up in this deal. Just things like we're doing today, answering questions, having people on the phone. Okay, our number is 305-865-8668. We got a caller right now, 305-865-8668.
Scott Simon.
Why would you list out the caller's phone number?
Scott Simons. What's going on, Scott?
Hey, Grant. Uncle G, what's up, my brother?
It's one of our investors right here, by the way. Hey, buddy, good to have you on board, man. Hey, Scott, how many have you put in with us?
I'm going in my 4th fund. It'll be over right at $500,000.
Dang, what a baller, man. Look, he's a redneck, too. Talk to me like a redneck, man.
Oh, I'm just this old Southern West Virginia hillbilly, Grant. You know that.
Yeah. So what'd you start with? What was your first investment with me?
I'm in Port St. Lucie, Ormond, and then the 3rd fund, and then I just went into the 4th fund with you.
And what did you put in 100 at a time, 50 at a time? What'd you put in?
200. It was 100, 200, 100, 100.
So you came in, tested the waters out a little bit.
Yep.
How often do you get a check from me?
every month like clockwork. That's why we joke around and say there's that mailbox money. But I'm in the car industry, and I maximize. I know what I'm good at. I'm good at managing car dealerships, and I've been really fortunate. So I wanted to get involved in real estate. So basically, I researched who knows what they're doing. I've been friends with you and known you through the car industry over 20 years. I trust you.
Yeah.
So, trust, returns, you know what you're doing. So I'm basically just riding your coattails. And it's been a great partnership for me. You've done everything you said you would do. Got a real good email from you yesterday or day before that you're referencing where our returns came out really nice. So I appreciate all the hard work, brother. It's been a good investment for me.
Yeah, dude, I appreciate you, man. I appreciate you, believing in me, and I love sending you money every month.
Me too, brother. Me too. Keep it up, man.
Okay.
Let's grow.
So he got 13% on one investment with me this year. He earned 13% on his money and still owns we still own the asset. So guys, if his cash flow is 13%, Facebook's down 40%. What else? What's some of the big stocks? Apple's down from 225 down to under $168.
Amazon's down.
GE, the strongest company in the world, is down 70%.
GE, Ford Motor Companies, from $16 to $9. Like, people are taking a bath. I have a buddy right now. He lost $200,000 this week, $300,000 the week before in the stock market. I have another friend's got $20 million worth of Apple stock. He lost freaking $8 million. And I've been telling him, I was playing golf with him.
Grant's capitalizing on short-term fluctuations to make his fund more attractive. Now, I'm betting if you track the price of Amazon from when this was released up to, say, now, it's probably appreciated very well. Did appreciate better than Grant's fund? I don't know. It's probably a safer investment for sure. But one way of making your fund appear more interesting is to compare it to short-term fluctuations in the stock market.
With him, I'm like, dude, get your money out of this garbage. Okay.
Yep.
Yeah. So Facebook was down 5% yesterday, while Scott Simon earned 13% on his money last year, and it's all passive income, most of which, by the way, will not be taxed.
Hey, Grant, this is from Pasquale. It's an entity question. If I invest with you, do I need to start an LLC?
No, you do not need to start an LLC. You do not need to go get a corporation. You do not need an S corporation. You need to send me a check in your personal name. You having an LLC does not benefit you in any way. These cash flow checks that Scott Simon and my sister just said that they got, they're taxed at the lowest rates of all money in the United States.
Clever marketing thing Grant is doing over this whole presentation is he's presenting this as if it's a Q&A for investors in his fund. But obviously this is actually directed at prospective investors, people who are on the fence. By titling it a Cardone Capital Investors Q&A, it seems exclusive, like, oh, the members of this elite club are watching this. I, a non-investor, want to watch it too. I want to know what the secrets are. When in reality, this whole presentation is for people who have not yet invested.
States of America. Thank you, Donald Trump. One thing he slipped in right there at the end of that last deal. Passive income from last year, 2017 to 2018, passive income distributed from real estate, okay, actually came down. So he slipped it in right at the end. He's a real estate guy. He loves real estate. So you got to know he's working his boys over there to make sure the code protects the real estate that he loves and is so heavily invested in.
One of the questions here was, if I invest $10,000, what's my return per year, right? And you had mentioned it's $500 per year.
Yeah.
And then they get paid out monthly. What is it, $50 a month or $30 a month? Why do some people look at that and think that's a bad deal? Because for me, when I look at that, I think that's an awesome deal. When I compare it to the bank, right?
Yeah, this is what happens with the little guy. The little guy's like, hey man, I'm investing 10 grand, and 10 grand only earns me $500. The reason you only have 10,000 is because you treat 500 like it's nothing. You send me $500, dude, you give me $500. Watch. You put 17 people in a room and you throw $500 on the floor. I'm like, I'm buying that. I'm getting that damn 500. You think it's 500, but you know what I think it is? I think it's $1,500. Okay, I see every 500 as 3 times that because I know $500 can buy me $1,500 worth of real estate. Okay, the $10,000 investor, the little guy, says that's the only 10 grand. Yeah, but it buys $30,000 worth of real estate, and $30,000 worth of real estate 10 years from now could be worth $60,000. Okay, that means I got paid peanuts, nothing, drips, to get 10,000 to.
Grant is really good at flipping the script, establishing frame control. Notice that in this, he's handling an objection right now. He's handling the objection that to the little guy, $10,000 is a lot of money saved to them, and that $500 per year doesn't seem like that much in exchange for $10K. Grant is he's sort of breaking down this magic math where how you're at $500 a month is actually more than it seems. But notice that he's capitalizing a bit on insecurity here by saying, oh, the reason you don't appreciate this is because you're not a savvy enough investor. You're not thinking the right way. If you were a smarter thinker, you would see how much $500 really is. It kind of reminds me of how, like, kung fu gurus or Zen masters would trick people to get things done. You've probably heard the story about young boy goes to a Zen master and says, how do I get strong? The master says, I'll think about that. In exchange, in the meantime, go chop some wood for me. And then the boy does that for a month. And at the end of the month, the boy says, so master, how do I get strong? And the Zen master says, well, look at your arms. You've been chopping wood so long. Now you are strong. There's kind of this interesting history in like martial arts and Zen of gurus of gurus tricking people or of gurus offending someone slightly in order to make their point and to be as persuadable as possible, to interestingly persuade someone through repelling them a little bit. And that, I think Grant picked up a little bit of that when he says, well, if you don't understand the value of $500, that's because you haven't been a savvy enough investor yet. But if you invest with me, then you will be.
It becomes 60 grand. So I'm giving you guys an opportunity. I'm giving the little guy the opportunity to invest with me so that you guys don't go for the Bitcoin play. How did that work out? See, why Ty Lopez was telling you guys to buy Bitcoin at 20 grand and didn't own any, I owned $1 million of it and said, don't buy it. He took down all his YouTube stuff. I'm not speculating. I don't want to speculate.
I love the interpersonal drama here. I didn't realize that Grant Cardone and Ty Lopez had a spat. As an aside, I love the drama.
Speculate. Give me $500 a year. What you want to do, little 10,000, little guy, what you want to do is get rid of the 10,000. That's the play here. The play is not the 500. The play is get rid of this. This is what Jared's been doing now for 4 years with me. He gets surplus money, gets rid of all of it. Once you get rid of it, nobody can ask you for help. I mean, they can. But Jared's telling all his friends and family, dude, I'm broke. I don't have any money. All of it's with Grant in the real estate. Once you put it in the real estate, you can't get it out. Okay, you want to be illiquid. You don't want to have money for the strip joint. I'm just saying. Some of you get weak when you get tequila in you. Some of you get weak when you go and buy the superstore. You go and buy, oh my God, a Lamborghini. Some of you get weak, man. If you don't have the money, you just don't have the money, and you don't get weak. You're like, I can't do that watch right now.
Back to the Zen Master thing. He's scolding people into an investment, saying, actually, you want to invest so much that you're not spending frivolously. Not the most above board thing to do here, but it is important to watch these tactics and be aware of how you should study the dark arts when it comes to marketing. Don't necessarily employ them, but be aware of them. See how he's flipping the script by, instead of trying to kind of sweet talk you into the investment. He's scolding you. No, you want to invest so much that you can't, because that's a good thing, because then you can't waste money on a Lamborghini, whatever.
How much is that watch, Alan? He got a $160,000 watch. See, to me, when I see a watch, right? I don't see a $160,000 watch. What do I see?
Zero.
$480,000 piece of real estate, $500,000 that 10 years from now, I know, like if I fucked up, it's going to be worth $1 million. If I screwed up, that watch becomes $1 million. Okay, that means I could make 800 grand not buying the watch. Now, I know at some point you can just go do dumb stuff, but you should only do dumb stuff off of passive income. Money you did not have to work for, didn't have to think for, didn't have to do something smart. You just made an investment and it pays you, and that passive money you can waste.
Greg was asking, what does my money get invested into?
Your money gets invested into a real asset, not a piece.
Do you want to show them some of the properties?
Look at you, man. Look at you.
That's awesome.
That's what it gets invested into. Real assets, real addresses, real cash flow, real tenants. You can go visit the properties.
What do you look for in these deals?
What if a catastrophic event from Greg Meisner? If a catastrophic act of God wipes out the property, I am invested in what happens. So it never happened. It's never happened. I mean, I guess if the locusts come through, back the biblical locusts, they come in. However, if it happened, 31 acres, show them the Delray deal. Do you have the Delray deal? Man, you got your game on, dog. No, okay, show them this. This is 88 acres. This is stupid. This is ridiculous. Okay, what act of God is going to wipe out this whole thing? This is $101 million. But let's say that it did happen. Let's say that, I don't know, what could it be? 400, no, this is up on a hillside, so it couldn't be a flood. 400-mile-an-hour winds come through, a tornado.
Earthquake goes through a fault line, splits
Yeah,
through
yeah.
the valley,
Yeah.
and a sinkhole takes it down through the Earth's crust back to China.
Yeah. Okay, so let's say there is something catastrophic, okay? Isbala, or whatever their name is.
The thing about catastrophic events is that they never happen until they do.
It's come and they plant 450 bombs in 450 units and blows the whole thing up. I'm covered under insurance, right? Am I covered for that? Yeah, I think I'm covered. Hurricane comes, I'm covered.
You have terrorism insurance?
Okay, I got terrorism protection.
I'm surprised you go to the insurance argument first. That seemed like the most salient, to say that if this does happen, here's what would happen, as opposed to just ridiculing the idea that it ever would.
So we're covered. That has never happened to me. In 2008, let's talk about catastrophic. In 2008, when the housing industry had the worst contraction since 1929, I didn't lose any money. I kept all my property. The banks around me, banks that I owed money to, went out of business, and I didn't go out of business. We got any more callers over there? Okay. Yan says, do you still open investing to Cardone Capital till February because I get my bank account in February? I'll apply right now. Who do I contact to create an LLC from Grant's office? You can call Melissa. Talk to Melissa. Nevada Corporation offered to create an LLC for her for $4,000. That's ridiculous. You shouldn't pay $4,000. I can get that done for $300 or $400. Somebody's ripping you off, Yan. You don't need to do that. Matt, what's going on, Matt Monero?
Big guy, I wanted to call in with a real-life testimonial for your audience.
Oh, dude, that's awesome, dude. Dude, I'm going to turn this into, hey, Matt, I've been telling you for, 3 years about my real estate, right? I'm always calling you, hey, Matt, I got a great deal. Do this deal, Matt.
Dude, I know. I mean,
I'll call you later, Matt.
I love it. I love it, man. So listen, people need to understand, Grant, couple things.
Got losing?
Grant, you still there?
Yeah, I'm here, buddy.
Listen, I just want people to understand one or two things. The first thing is there have got to be some people on your line right now or your stream right now who say to themselves, boy, I bet if Cardone can do it, I can do it.
Yeah.
Maybe I should just hold off because if he can do it, I can do it. And I want people to understand you can only be the captain of one or two ships, right? I happen to be the captain of my business, which throws off the cash, which allows me to not have to be the captain of my real estate business because you're one of the captains of my real estate business because I can't do what you do. Mm-hmm. It is impossible for most people to
This guy definitely sounds like he works for Grant.
do what you do, to find the deals, to analyze the deals, to fly around and see the.
He's stating this argument. This almost sounds like either he really believes this or it sounds like it was pre-written because he's stating it so well. He's handling this objection so well.
Deals, to touch and feel the deals, and I just gave up and said, you know what? I'm going to trust Cardone with $1 million of my money, and there's only a couple people on the planet that I trust with $1 million of my money.
Yeah, and you didn't fully trust me when you did it. You're like, God damn, I hope this goes right.
Yeah, I mean, if we want to go there, I'm fine with that too. I started with 300, then I went to 500, and then I went all in with another 500 for you, and evened it up to $1 million.
Yeah,
it's been a phenomenal investment. But I think what's important though is people need to understand that sooner or later you've got to determine what ship are you going to be the captain of.
Yeah.
And I didn't want to be the captain of a real estate ship because that takes my attention away from the primary ship that feeds the cash that I can allocate to other things.
So, and just so you know, Matt, if I remember this, Matt, it's been a while, but Matt put $1 million in a deal that I had already bought, right, Matt?
Yeah, Savannah.
I had already bought the deal. I'd owned the deal. I'd probably owned that deal for 3 or 4 or 5 months. I had put, what was that deal? How much did I put down on that deal?
It was $7 million.
I think you did 4.
29.
I think you put 4 down.
Probably had to put more than that, but it was $32 million. Let's say I put 4 down.
30.
Huh? And I financed $28 million. I'd owned it a while, told Matt, I said, you really should invest in this deal with me. He came in, I think 1 or 2 other people came in.
Yeah, you put 7.5 down.
Yeah, I thought it was $8 million. I put $8 million down, but we refinanced it, Matt. That's what you're thinking about. That's why we're at 28 now. So we put $8 million down on the deal. I put $8 million down. So, Matt, how soon did you get a check after you invested with me?
Oh, right away. I mean, I think within 30 days or so.
30 days later, he got a check.
For everybody to understand, every month.
Yeah.
Every month since then, on the 27th of every month, the check comes in my mailbox.
Yeah.
And it's happy days every time it comes.
Happy days are here again.
Joe's actually asking the same question.
Yeah.
He says, hey, once you refinance, does his ownership share, does it change?
Okay, good. Great question. Hey, Matt, thanks for calling, buddy. So
you got it, buddy. Thank you very much.
Yeah, appreciate you. So look, we refinanced this deal, okay? I put $8 million down. I went back to the bank later and said, hey, I want to refinance this deal. They're like, we'll give you $28 million of debt on it. So the $8 million we had, now we returned $4 million back to our investors. Okay, that is a non-taxable event. Everybody got their piece back. We still own the property. Now, I'll tell you right now that
this is really important to understand. I think this goes right past a lot of people.
I mean, you guys are asking questions like, hey, tell me about my $500, but this is not the magic of real estate. Cash flow is king, only because the cash flow allows me to keep the property long enough for us to find a buyer that will pay us a premium. And there's 2 ways to exit this real estate, which, by the way, the do-it-yourself thing, Matt, even though Matt's a rich dude, Matt could not buy a $32 million piece of real estate. No offense to him. He's probably going to feel a little hurt me saying this, but he couldn't buy it, dude. He didn't have 8. He had 1. Okay, 1 doesn't buy that deal. 8 buys the deal. Even if he had the 8, by the way, Matt probably couldn't have bought that deal because 1, they probably wouldn't have taken his phone call. 2, he probably didn't know about the deal. 3, he probably couldn't have gotten the $24 million loan. Even though he's a rich dude, he wouldn't get the loan not because his credit's bad, but because he doesn't have experience managing big facilities. I do, okay? So check it out. These are the 2 exits. And this is a bigger question. See, the investors really should be asking, Grant, what should I be asking right now? Mm-hmm. Sometimes we don't even know the right questions to ask. There's 2 exits. The first exit is a refi exit. The second exit is a sale. Okay, and there's actually a third exit, but I don't want to complicate this for you guys. When I buy a deal, when I let a non-accredited investor come in for 10 grand or 25, our average investor in the first 5 days has been about $25,000. When we buy the deal that's in that fund right now.
I had guessed earlier in the video that the non-accredited solicitations were probably bringing in 1 to 10K. Now, at this point, keep in mind, he wasn't raising less than 10K per contribution. But he just said that the average, it sounded like he said the average non-accredited contribution was 25K. That does surprise me. Knowing his audience, Grant Cardone's always been sort of a business opportunity guru. And typically when you're selling business opportunity courses and things on how to upgrade your income, typically you're selling those to people with very deficient incomes, to broke people. So I would not have guessed that his average contribution from non-accredited investors would be as high as 25K.
Right now is $92 million. Okay, I put $32 million down. I finance. When we buy the deal that fund right now is $92 million. Okay, I put $32 million down. I financed $60 million. Again, bought. It's already bought. It already cash flows. You come in today. You make a decision. I'm giving this guy my Christmas check. Boom. We start writing you a check next year. As soon as your money comes in, we start sending you money out every month. The first exit on this deal is to refinance the property and return the investors their $32 million. So his question, Joe, when I return, let's say we get there. Let's say I go back to the debt market. I go back to the lenders. We're talking to lenders every day. Every day I'm talking to 1 or 2 lenders. I go back to the lenders. We already know what we have to do on this property. I already know where I need to get on this property to refinance the property. Okay, let's say 4 years from now, it'll be 2022. I think our NOI needs to be around
2022.
About $5 million. I think we're at 4.4 right now on this deal. So I need to get my net operating income to a certain level, at which point I go back to the bank and the bank says, sure, man, we'll refinance it. Mm-hmm. They give us the $32 million back. We send that money back to all our investors. We make everybody whole. You still own the same exact percentage. Other funds don't do this, by the way. Other funds have in their clause that they can take, redistribute, and take over the property and count that as paid. I think that that's a ripoff, personally. I would not want that done to me. Dude, I went through this 4 or 5 years of a little bit of cash flow. Now I get my money back. You finally get this place in a position where I get all my money back. The ultimate, the super velocity wealth creation is I got my money back and I own the property.
Mm-hmm. Rosetta's asking.
Then we would sell. Then we would go sell. So just so you know, this is not pie in the sky shit. I'll tell you a deal I did. $58 million. $58 million. I put $15 million down to buy it, okay? We got our entire $15 million back. Jared was in part of this deal. My sister was in part of this deal. My twin brother was in part of this deal. The entire $15 million, 100% of it, came back. We still own the deal. The deal still cash flowed. Okay? The cash flows at this point now are infinite. They're not 5%. They're infinite. You understand? We have no money in the deal, and everybody gets a check. That was one. That's called the refi. The second refi, by the way, there can be many refis. As long as we own the property for long periods of time, there could be 3, 4, 5, 6, 7 refis. We could refi this. I could be refining this again in the year 3000.
Can you clarify? You say one thing. You say, hey, I will always have debt on a deal.
Dude, I'll always have debt on a deal. Debt allows me to distribute chunk wealth, tremendous wealth all at one time. When these people got their 15 million back, most of which was mine, by the way, that is a non-taxable event. I want my money back. Why? Because I can take the 15 million and do what?
45.
I can go buy $45 million worth of more real estate and hope that I do it on this deal as well. Okay? But let's go back to this deal because this deal gets better. And this is why you want time on your side. Look, if you know you want to invest with me, if you're listening to this saying, dude, this guy's a genius. By the way, I am, okay? And I'm not bragging when I say that. call us. If you know right now you want to do this, get in this fund now because this fund will oversubscribe. What's the phone number here? 310-777-0255.
Just want to point out how thick Grant Cardone's neck is.
If you know you want to do the deal. 310-777-0255. If you want to do 100, the max 100, if you want to do 100 and you're qualified to do that, I'll do something special for you on our 10X Growth Conference.
In Grant, they could also go to cardonecapital.com.
Cardonecapital.com and
Click
just
on
fill out all
Fund
your
5.
paperwork.
Yep.
Okay?
Fund 5 is...
Cardonecapital.com. You got to start filling your paperwork out anyway, and it's gonna take you 3 or 4, 5 minutes to do it. Okay? Check this out. This story gets better. I just refinanced this property for $108 million. Okay? I paid 58. We got all our money back. We had no money in the deal. I went back and refinanced it again. They gave me 108.
Okay, guys, I want to hold on. Let me open up my stream here. I want to thank you guys for being with me on the stream, if anyone actually was. I did not intend to do a full stream on this investor's Q&A. I intended to do it on the webinar that Cardone actually sells the fund with, which is somewhere up here. But because the webinar was not pausable, I did not. Now, I will be having some information coming out. Probably some of the next streams will be on things like the difference between Regulation A and Regulation D funds. Also, Jake Paul's anti-fund and the fusion of influencer marketing and venture capital. And I'm going to find a way to get the Cardone webinar. Anyways, for the most part, the purpose of these streams of Fund Launch Live is not to dissect real estate funds. It is for the founder who wants to, the Silicon Valley founder who wants to become a funder. And these streams exist to break down the marketing tactics and techniques for launching your fund. Anyways, I want to thank you guys for watching very much. And I will see you tomorrow because this is a daily live stream every AM. Thank you.